Welcome to TradeTheMBI.com. This is Jonas Reports for the 4th of March, and the gyrations continue. So what we ended up with the previous day was this nice crossing of midterm buyers, the green over the red DOC. Of course, the red DOC pretty deep here, trying to get itself back up to that negative 13.5, which would be much stronger. But we did get the crossover even on the down day yesterday, and we supported right above the 23%. So that became a nice threshold from an algo standpoint, and this is something we talked about, above this 81 level. Longs are definitely within reach, particularly when we have the crossovers that we're looking for. Now, pre-market here, we're already seeing green crossing cyan and complete short covering, which took place after the Fed decided to cut by half point, which, while in the midterm sounds good, the difficulty you have is that because it generates like the lowest yields possible, so you're kind of forced back into treasuries out of treasuries and into equities because you're not getting any return. It's also going to bolster the euro because obviously you're devaluing returns for the US. So these are all the bonuses. Now, of course, we have the 38%, which is the next hurdle right there at 61. We're getting pretty close to that. Probably will hit that. And then we have just returning back up to that 50%, which is the 31.25. So this could be a significant enough game changer. We still have the dip below the red line, so that 28.67 range, or the actual low being 53, but with the broader tail, I think it's safer to go with the mid-range right here at the 28.98, which would be the open of this giant day that took place on the turnaround. So that's the market doing what it can. Also, you have the election results, which indicate more of an established candidate, which means status quo for the market. I don't think they're troubled by the idea of the Biden presidency, and certainly not by Trump either. So from a market standpoint, it's a no-lose. So that's actually good for them in that standpoint. Of course, a long way to go. The NQ at the 38% right there, and also much cleaner, and you can see stronger because it's already above the negative 13.5, which is something critical you need to be able to sustain any upside move. The gyrations are still going to be significant. So here's the euro. Of course, the turnaround on that because of we got right to that critical threshold. We could see that there was a significant amount of desire to keep that from imploding, because it really could have been very ugly given the fact that Europe is pretty much at a standstill and the US was still continuing to grow. Without this pandemic, the euro would have been even more shape. So this is quite a bonus for keeping that going, which actually helps the U.S. Oil stabilizing is also going to be critical because at this threshold it still needs to move up a bit more to stave off what will be calamity from shale producers and everything else, having to lay people off in that. So gold, bounce back rally on that. Is that going to be sustainable? It's potentially possible. We never really went to a deep negative shakeout. We got the return here, and of course, again, with that yield reduction, safe haven becomes popular. A lot of this was a result of people tend to liquidate gold positions when the market has severe down days and stuff, simply because they need the resources from that. So from an intraday, it was quite nice because I had started posting on the Skype chat about this scenario here where we ended up with higher highs right here. We started to make lower shakeout, and then by the time we got to the matching highs, which actually produced just a fraction higher, we were significantly low. So when this DOC spread developed right here at the what I call the rejection point, where the two both cyan and green meet, and then you get a rejection, usually you get a nice return from that to be able to play that lower, and that actually was quite successful. And we were looking for the 63, took that out, and actually then just lovely trade station. Well, okay, that only took a little while to restore everything back and to reboot. This periodically happens sometimes with the TS, don't know why. But anyway, we were talking about what I was saying here with the lower shakeout readings. I had to redo a lot of my lines that had already been placed in there. But we ended up starting the day early in the pre-market hours, and we ended up developing a very similar kind of peaking that led to the exact same areas with the same targets here around that 30.63 range. And it was interesting, though, that once we started going, we had this nice huge boost up that was pretty clean. And that, you gotta understand, I love this one where we get our orange dip below the red, we get the green crossover at the same time, meeting with the cyan. Those are really nice. Now, it's ideal if you also get the crossover of steel, either coming from below or, in this case, crossing the cyan works beautifully as well. But then again, so do the DOC spreads that come in this particular case. This was an interesting one because I expected a turnaround move, so I wasn't looking for anything, but it dropped so fast that by the time the steel crossover came over here, and you're just about to meet with the green crossover, you had already retraced right back to the exact same level, which is beautiful. I did have a good question. I was asked, what do you do if you miss the DOC spread? You know, right here, DOC spread meaning the cyan crosses above red. It's like, oh, you know, it started down, but I wanted to enter, didn't quite know when. Well, you're certainly not going to be doing your entry when steel is crossing above cyan. That's the exact opposite spot, which is where a lot of people might actually think about shorting because of their readings or so much lagging. What I look for is situations like this where we get a move of cyan and green towards each other, and along this meeting point I'm looking for a rejection, and in this particular case the rejection is perfect because I get green crossing below red, cyan moving up, and the beauty, the steel crossing below cyan. So that's where you hit it. That it's also at the 50% marker. Beautiful. We haven't talked about it in a while, but the gold rising had started to plateau below the 50%. We know that rising gold below 50% usually leads back to the zero. And guess where we went? Right to the zero. Now it had squeezed, so there was a less of a range. But what was beautiful about that is as we reached the zero, on that separation, there was no new buy configuration, which left it open until you got over to this area right here where the orange popped in, and you had the failure of green to make the transition. You had just started to get shakeout, and do I object to someone who covers at this spot? No, but as soon as you get the rejection, you've got to know that you're right there, and this is where that 3063 having the algo lines is great because you can use that as a pivot point between your 23 and the algo level, and it just narrows the range, especially if you're at an ABM area that hasn't reset, particularly when we get these long runs where we haven't had a steel reset. That will happen, but correspondingly we ended up with the nice buy configuration that ended up started right here with the blue setup. We had the crossover, rising shakeout at that particular point. Anywhere along there, some people have a preference where they want to try and capture between that 0 and 23% on the lower side of it. But I think you can be just as comfortable too waiting for the breakout of the 23%. Often what times will happen with these, and you'll see this a lot, is you get an initial run, it'll hit some resistance, come back a portion. It's for kind of that ABC effect, boom, boom, boom. And once that shakeout turns positive, you know that you're on the right track too. In this case, again, falling Morganacci highs lead to price wanting to be pulled up to that 100% marker, and that's exactly what happened when they met. Yeah, DOC spread develops right afterwards. The reason you get the later BK marking on that is because of the yellow above the plus 15, and we know that sometimes those can sustain a run. But with the volatility that we've been seeing, I really wasn't having too much of a problem with that. And the nice part about it was you had this dip right here below the red line, which that's where these little dots pop in, and boom, filled that all the way back. So these were just some beautiful examples. I mean, you had this nice long short run from the 63 all the way down into the 70, what was it, 74 or 71 range. Yeah. So then we just kept building back and forth, and this led into the Fed, from the original pump, the fade, and then once you get too many people going one direction, this is where you get the bounce back returns and throws them off because they're not ready for it. And that's really what we see a lot of in the market. There's a base valuation, but the fluctuation is about imbalances. And this is really what the algos are keen on finding, is those imbalances and the relationship between them. And that is really what the DOC is doing. It is converting the a variety of different things, but you can go anywhere from the gamma on down to the relationship between how these interactions take place, and those imbalances are really what they look for to take advantage of it. And this is why the Morganachis work so well with these setups, because it relies more on that than the traditional peak to valleys, because it's not really what the algos do, because we can see that they respond in some very strange spots where we get positive extremes that get filled right in this area, the 2994. I mean, who picks that? But see, that's the perfect nature of it. You're not expecting it, and that's what makes it work for them, because they know at least we get to see it. And then, here, look, we're at the peak and you dip below the red line. That, tends to be a little bit more bullish when you're above the 50%. So I just wait usually for another peak and then the rejection. So it's, again, this is where I don't mind if I'm in a small time frame scalping in and out of it. We still knew we were within a, overall daily broader short, which has converted now. So we're much more upside bias because of what we saw with the dip of the orange and the conversion of the daily. We also saw it on the 50K where the Power Mode 2 Opus 2T was buying within the dip on that. And so this happened in post-market, and this is the beauty of these kind of moves. Everyone always complains, it did happen while I was asleep, blah, 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 blah. And it's like, well, exactly, because I have super low liquidity, though I will say the spread on some of the activity that was happening was wider than you would expect. And by that, I mean, yes, just because you could see contracts at the tick, I mean, they were very tiny, and that allows for, in this case, we were seeing 4-6 point tick moves on the ES, just because you only had 1, 2, 3 contracts, and just to fill in the line, and really wasn't any volume there in some cases, so that was creating an exacerbation of the movement. I think we're going to continue to see that kind of light liquidity, but they love to do that because now in this particular case you get this massive pump up. We do have some positive extremes within this setup. Right about there, this one was already filled, and then we ended up right here with another positive extreme, popped up, came back, filled it. So any new ones that start to create will most likely look for their refills. It's already taking place right here. You can kind of expand the chart now that we're at the end of it. Some of these days are just so amazing. I mean, we're looking at volumes that typically would take 3-4 days to produce are being done in an hour. I mean, I was exhausted after the other day because it was just so extreme. So it's fun, but and this is the nature of trading. There are certain days where you can just go off, have lunch, program, do whatever, and some days you just got to put in every minute you can because it's a gift opportunity. So it's just a matter of recognizing those when they're happening, and this just happens to be those kinds of events. Of course, with election and everything else, I'm not going to go into super length on any of that stuff right now, but for now we can just go with one of the setups, and particularly as we get some of these more unique ones, like I was talking about, we had a couple of these where we had cyan under red in the early volatility, and then we had the steel cross below. That works if you have declining red, particularly below zero. But in like a case like this, even though you have the steel crossing below, which can tend to express some weakness, it did. But you have to realize if you've got shakeout above red above zero, you're not going to get that far of an extended. So if you're doing some quick scalps, that works. But to expect those to be broader shorts, no, not gonna fit within that, because this is what happens when you see that kind of setup. You get the signal, but we had short-term buyers already rising within this, and you're already at an elevated shakeout that as soon as that histogram turns around, boom, turns around and starts to go in the direction of the shakeout. So all good. As always, though, I will keep updating you on the Skype chat. Trade well.